For so many of us, owning a home is the ultimate dream. But that front door, it often feels locked tight, and the biggest obstacle is almost always that down payment. So today, we're going to talk about the keys the government provides to help you unlock it.
I mean, it's the classic American dream, isn't it? Finding a place that's really, truly yours. A space to build a life, maybe a family, or hey, just a really awesome garden.
And this is exactly where that dream slams into a brick wall. Trying to scrape together tens of thousands of dollars for a down payment can feel completely impossible, especially when you're already shelling out a ton of money for rent every month.
So, how did we get to this point? To really understand why these government programs even exist, we've got to rewind the clock a bit, to a time when buying a home was a much riskier game.
See, home financing used to be a completely different world. Forget 30-year mortgages. Most people had these short-term, interest-only loans. Can you imagine having to renegotiate your entire home loan every few years? Well, when the Great Depression hit, lenders just couldn't renew those loans anymore. And the result? It was a disaster. A massive, catastrophic wave of foreclosures that became a true national crisis. Something had to change.
And that big change was for the government to step in. Not as a bank, but more like a partner for both you and the lender. But the way they actually do that is where a lot of people get it wrong.
Okay, let's just bust the number one myth right now. You hear government loan, and you immediately think Uncle Sam is writing you a check. That is not how this works. Not at all.
Here's the reality. The government doesn't actually hand you the money. A private bank, a regular lender, still does that. The government's real job is to be a safety net for the bank. And this sets off a really simple but powerful chain reaction. The government basically tells the lender, hey, if this borrower can't pay, don't worry, we've got your back. Suddenly, the lender's risk just plummets, and because they're taking on way less risk, they can turn around and offer you, the home buyer, a loan with a much smaller down payment and way more flexible requirements. It's a total win-win. So, with that in mind, let's look at the first major pathway, the FHA loan. You can think of this as the most popular key out there, especially for first-time home buyers.
And this right here, this is the magic number. This is the one detail that makes the FHA loan so incredibly powerful. Instead of needing to save up 10 or even 20% down, you might be able to get in the door with as little as 3.5%. That is an absolute game changer.
All right, let's break down the essentials. The loan is insured by the Federal Housing Administration. That big benefit, of course, is that tiny 3.5% down payment. It's also usually more forgiving on things like your debt-to-income ratio. This makes it pretty much ideal for someone who has a steady job and decent credit, but just hasn't had the years and years to build up a giant savings account. The main rules? It has to be the home you're actually going to live in, and you'll typically need a credit score of at least 580 to get that best-case financing.
Now, of course, that government insurance isn't free. There's always a trade-off, right? And for FHA loans, it's called the Mortgage Insurance Premium, or MIP. You're basically paying a fee that covers the FHA's risk. It usually comes in two parts. There's a one-time upfront fee that's often just rolled into your total loan amount. And then there's an annual premium that gets broken up and added to your monthly mortgage payments. It's simply the price you pay for that low down payment.
Okay, now for our second major pathway. This one is designed for a very specific and very deserving group of people. We're talking about the VOA loan.
And really, this quote says it all. A VA loan isn't just another financial product. It's officially described as a benefit that has been earned. It's a really powerful way of saying thank you for your service.
So if 3.5% was a game changer, this is on another level. For most eligible veterans, the required down payment is zero. Nothing. Zilch. That is, without a doubt, the single most powerful feature of the entire VA loan program. Now notice the difference in language here. Instead of insuring the loan like the FHA, the VA guarantees a part of it. This guarantee is what leads to that incredible benefit, a potential $0 down payment. And here's another huge plus: no monthly mortgage insurance. The main requirement is that eligible service members and veterans have to get what's called a Certificate of Eligibility, or COE, to prove their service. So the VA loan has a trade-off too, but it's very different from the FHA's monthly premium. It's a one-time VA funding fee. This fee helps keep the program running for future generations without costing taxpayers as much. The good news is you can usually just roll this fee right into your loan. And this is really important. Veterans who are receiving VA disability compensation are often completely exempt from paying this fee at all.
So, we've walked through the two main keys the government offers to help you buy a home. The big question left is, which one fits the lock on your future front door?
It really boils down to two very different profiles, right? On one side, you've got the person who's financially responsible, has good credit, but just needs a little help getting over that massive down payment hurdle. And on the other, you have the veteran or service member who has earned a specific, powerful benefit through their service to the country.
Let's just put it all side by side, so it's crystal clear. For the FHA loan, think best for buyers with lower savings, a down payment as low as 3.5%, but with an added monthly cost for mortgage insurance. For the VA loan, think for eligible veterans, often a $0 down payment, but with a one-time funding fee. Two different paths, two different sets of costs, but they're both designed to get you to the exact same place.
And that, right there, is the bottom line. Whether it's the FHA insuring your loan or the VA guaranteeing it, the whole point of these programs is to knock down that biggest financial wall and make the dream of owning a home a real, tangible thing for millions of people.
So there you have it. You've seen the history, you know how it works, and you've seen the options. The path forward should be a whole lot clearer now. The only question left is the one you have to answer for yourself.